All right. Good morning, everybody. Hope you're having yourselves a fantastic Monday, feeling sharp, refreshed, recharged, and hopefully ready for what should be an interesting trading week. One with a few less headlines than we had there last week. So we'll see if that ends up actually causing anything or creating anything, however you want to describe it. But yeah, should be a reasonably interesting trading day, and hopefully we can keep up some momentum we established there last week, and hopefully can continue here this Monday morning. I was trying to find the right place for my coffee, but yeah, let's get after it. Not too much to rant and rave about here today. So let's just get at it. So we got a little bit of a busy economic calendar today. PMI at 9:45, more PMI here at 10 a.m., and then a bunch of Fed speak later in the afternoon. The Fed speak probably won't be anything too interesting here this AM. But let's see if that creates anything. And then again, with the PMI and ISM, I would expect it to be probably a little bit slower to start the session. And then we can kind of pick up volatility as the day progresses. All right. So, let's start mapping things out here and then go from there. So Friday, red candle, decreasing volume, and then a gap up. A 1 for 3 to the downside, non-trending price action. We've got effectively a bias in either direction. I don't think I need to change that 69.20. Pretty much spot on of where we'd like to be. To the downside, we're looking at that 68.70. And then further out from there, eventually targeting, that low a day, right, which was 40, effectively the gap fill, and then a further breakdown. To the upside, like I said, that 20 is fine, and then we're kind of targeting a move towards all-time highs, and then a significant pop above that. We have a effectively non-trending consolidation market, right, with two pretty big range days in between. So that does set us up potentially for maybe a longer period of consolidation. Like if we were to visualize those range days, right, and then kind of view our standing, we're effectively in the middle of that consolidation. And I would probably expect pretty choppy or an indecisive narrative until we either get a separation and breakdown below or a separation and breakout above. So it's going to be a lot of, I think, of what we saw there last week of quick moves, small trades, kind of nasty, fast reversals. And so we're just going to have to be really careful, sanity checking volume profiles, and I think waiting for that fake out narrative. All right. NQ similar, but an important distinction here. We've got an inside bar instead of it making a lower low. This maybe gives it a little bit of a better narrative for like that compression breakout or that consolidation breakout, and to move towards, say, that like 26,400, maybe a little bit higher probability than what you're seeing on ES, right, towards those equivalent all-time highs. So obviously volume is going to be very important here on NQ, but it is a slight distinction between an inside bar and a 1 for 3. And then just even, if we're going to like box in, right, the Thursday. At this point, you're in the upper third, not the lower third or the middle third. I think that gives you a little bit more oomph, right, for potential breakout as well. To the upside here, we're looking at a 400 as our starting point. Not much needs to change there. And then, through that, we're at all-time highs, and we're just pushing 100 points along the way. To the downside here, we're just looking at 26,000 as our kind of target, and then we're going to hopefully fill it out there as well. All right, the old crude oil green candle, increasing volume, gap down or red sellers today. So 2 out of 3 to the upside with volume. Not the best volume profile as we creep up towards that upper trend line, but still enough that it is interesting. I mean, we'd be looking for a breakout above 6150. So starting point here would be targeting 62. And then ultimately, we're looking for a breakout here through this trend line. And then, you go point to point to point. But we'll see if this thing has the juice. I would probably expect it to get rejected here more so than for it to break out here. But we'll see. We'll see if that ends up being true or not. And then to the downside, it would have to be a rejection off of the trend line or above the trend line, and then down towards sort of like that 60-50 area. So not too much changing from that narrative. Again, this is kind of like a secondary ticker, so I'm not sure how much energy and focus I'd put into it anyway. But let's see if it wants to behave in a reasonable way. Okay, Apple 3 for 3 here to the downside. Fine. Not a massive gap down. Could end up being like a little bit of a capitulation. Not amazing volume, right, relative to what we've seen on previous earnings. Like that's quite a bit lower, all things considered. So that could potentially change stories up just a little bit here today. Maybe that is like a sign of capitulation. Still made a higher high, still made a higher low. So there are bullish characteristics in that big, bad, scary wolf candle. But we'll see if it has any kind of follow through or any kind of for us to play with. All right, Tesla, 2 out of 3 to the upside with volume. It is increasing outlier again, kind of looking for a breakout above that 471. Microsoft, red candle, decreasing volume, technically a gap up. So 1 for 3 kind of pairs in line with that capitulation narrative. Fine. Amazon, big gap up. Wow. This is a weird ticker recently. A lot of big gaps and then selling those gaps and then a big gap selling those gaps. So it is a 2 out of 3 to the downside with volume setting up as mean reversion. Okay. NVIDIA. Red candle, technically increasing volume just by about 1 million shares, and then gap up. So again, we'll call this a 2 out of 3 with vol. And I mean, not too scary of a candle necessarily. A little bit of shades of Apple in this, right? Big scary red candle, but still made a higher high and a higher low. If bears were so strong, right? Why couldn't they crack down that extra little chunk? But we'll see, right, where that momentum or narrative comes in today. Again, maybe makes me feel more like consolidation than maybe a aggressive breakout. All right, AMD's got earnings here on Tuesday. That's going to be a wild story. Volume is getting pulled on this pretty aggressively going into its earnings profile or earnings story there tomorrow. I think that's a little bit of a concern, especially when it normally behaves like volume-wise very similarly to NVIDIA. So that would give me a little bit of pause with AMD, maybe setting up for like an oversized earnings move. So the lack of volume, I think, is a little bit of a concern. All right, Meta, red candle, decreasing volume, gap up. I mean, we were expecting massive volume post earnings, continued, but it did print us a 1 for 3 to the downside. All right, Netflix, green candle, increasing outlier, kind of a terrible candle shape, but we did still close above its most recent wicks and then a reasonable gap up. So I'll call this a weak-ish 3 for 3 to the upside, and it's just because of the candle shape. We did still close above our key benchmarks, but that is a little bit of a barely type scenario. All right. Google, red candle, decreasing volume, gap up. So again, 1 for 3. Kind of did a little bit of a gap and go type trade. Didn't quite fill the gap, but did a good job mostly filling it. So that's reasonable enough. And then the old Vixaruni, 17.34. Good implied volatility here. A little bit more than what we saw Friday, Thursday. So that should give us hopefully a little bit more enthusiasm or like a little bit more momentum this AM. Curious to see if it does or if we do get that story here today. but hopefully it's a smooth story for us to fall in love with. How's everyone feeling this morning? Everyone feeling good? Fantastic. Yeah, I think it's gonna be a good day. So, couple things. I guess like talk about from a trade perspective. I think we've been as a team, we've been talking a lot about trade execution here recently, and like how to not miss trades. Right. I think that's really been the focus. Hey, Abs, how you doing? Um, so let's see, how we can improve that. The thing I want people to focus on or think about a little bit, right, is to click submit as price is going against them, not for them, right? So if we're going long, we should be looking to click submit on our entry as price is decreasing. If we're going short, right, we should be clicking submit or clicking sell as price is increasing. So on the uptick, it's going to give us a much higher fill percentage, right? So on trades, a lot of people, I've had actually 3 or 4 people send me videos of them submitting their trades. And that basically is the object or the thing that they're getting wrong each time and when they're missing orders. So they're clicking a limit order, right, at when price is going already in their favor. And so when they submit it, by the time, it's all processed, price is now already higher than the price that they submitted at. And you just end up not getting a fill, or you're waiting for a fill to happen. If you buy in the downtick, then you're always setting an order above the current price or the submitted price, and you effectively ensure that you guarantee a fill. So that's the thing to focus on here, right, this morning. Always give yourself something technical to focus on a daily basis, right? Allow that to be your energy source, right? The thing that you slow down to and focus towards when things are getting interesting. But that's the process. I use limit orders for my entries, market orders for my exits. There's a lot of videos on my exact order process in the Discord. But what I'm doing, right, is I'm clicking submit as price either stalls or as it's down ticking, right, if I'm going long, or up ticking, right, as I'm going short. So I want to have confidence that when I click submit, right, that price is going to give me the fill that I expect. And the only way that I can do that, right, is if price is moving slowly enough or moving against me so that I can get in a trade. So that's the thing to focus on, right? You look for those two things, either price moving against you in a controlled manner or price spending, 5 seconds at 906.25 or whatever it is. Make it easy for yourself to get a fill. And yeah, like if you chase or if your objective is to not do that, then market orders are going to be a much better tool for you because they'll get you into positions. But the con of a market order, right, is that it'll sometimes screw up your risk management, and sometimes you'll get some really nasty fills. So if you're okay with that and you're okay with dealing with that con, go for it. There's nothing wrong with using market orders. But yeah, there are other techniques that you can use as well. So figure out which one you want to do. There is no right or wrong answer. And then, get better and better at timing your entries and building confidence in that process. And even if you are using market orders, you'll be able to manage that slippage and spread really easily too. All right, so we got about 45 seconds here till market order. Did my best pilot impression there. And we're going to see basically how things kind of creep up and come together. I'm going to go just fill up my cup of coffee here before the day starts. So bear with me for 30 seconds, guys. I will be right back. But let's get our minds right for a good trading day, and let's put ourselves in a good headspace this morning. All right, so let's mark it open. Let's see what our old NQ has in store today. Got a little, I'm not going to announce it here yet, but I've got a little, hopefully note-taking improvement. I don't know what you want to call it, to share those notes with you guys. We'll see if I can find the right flow to using it. But hopefully that goes well this week. And yeah, let's have ourselves a good trading day here, team. I'm pretty excited to see what's in store, or like, what the market has for us here today. Been a very, very interesting, I'll call it month. I think it's been a really interesting month. Really good volume, like for the range that we've been stuck in. And that has created a little bit of a sweet spot for me trading wise recently. So long may it continue. Yeah, convinced Q4 is my favorite time to trade every year. I love it. And not a massive range here so far. What would a small range tell us? Like, what would it confirm our fear of? Yeah, consolidation, right? Exactly. So if our biggest concern here today is that price action is going to be stuck, and then we don't see a very large range, right? Or an indication that price is stuck, for lack of a better term, then it kind of slows down the need to be very aggressive. The other element, though, right, to comprehend, I guess, is market's going to be waiting for that 9:45 and 10 a.m. data as well, right? PMI and then PMI again. It's going to cause a little bit of maybe like turbulence. So, with the size of the gap up, with sort of the expected mood of the market, with all of those kind of like little factors, maybe the most likely outcome here in the first 30 minutes is that slow consolidation. And then you get the data to trigger of effectively the range or the direction of the market. If I'm being an optimist, I would say that's like the optimistic case. So we'll see. And just remember, right? As traders, we get paid for the quality of our decisions, not for our time. So just because I've been watching the market for 3 minutes and 30 seconds doesn't mean I'm going to have to force a trade here today. Doesn't mean that I'm going to be owed one. Just because I woke up early, right, and I went to bed at a disciplined hour yesterday, doesn't mean that the market owes me a trade here this morning. The only thing that I'm guaranteed is the opportunity to sit and watch. And then it's really up to Mr. Market himself if a setup is going to happen or if it wants to give me an A+ look. Once market opens, right, my job then goes from being a trader to just being a rule follower. So all I'm doing here is I'm just waiting for all my rules to kind of line up, sync up, tell me the strong, consistent narrative. And then when they do, I'm going to execute them without any discrimination or hesitation or any fear. And then if they don't, well, I'll just keep doing my job, right, of waiting for my rules to come together. So no worries if I get a trade here today. No worries if I don't. Need to be really focused on just controlling the variables I can control. And the easiest variable for me to focus on, right, is how well am I actually following my process? How well am I actually following my technique? How well am I behaving compared to how I said I was going to behave? It is really funny, but the market loves to like reward us for basically not being 6-year-olds at a birthday party, right? Where we're a little bit more controlled, where we don't have to be the craziest kid running and screaming everywhere. And if you do that, the market rewards you tremendously. I was reading an interesting book this week or this weekend. I kind of it's a really short one. It's like 40 pages, so it's not some flex, but it's about Jesse Livermore and like how he trades stocks. And one of the things that he mentioned that I loved is that the stock market's job is to turn average people into fools. That was effectively his thesis. And what he meant by that, as he kind of like explained it further, is that it's our minds constantly trying to trick us into doing something that we think is better for us than what it actually is. And so if we can absorb or build out systems to not make it easy for us to break our processes, then we're putting ourselves in a situation where the market isn't necessarily going to fool us as easily, and we can avoid our kind of obvious mistakes. In that fight, right, or in that period, there still is that moment, right, where you're fighting with the trader you've been and the trader you want to be. And most of the time, right, the trader you've been and the trader that you want to be are at odds with each other. They're conflicting, right? They've got a different agenda. They've got a different feeling in the moment. And the hardest fight you're going to have as a trader is really focusing on fighting against that demon, right? Or fighting against that like version of you that is resistant to change. That's the hardest battle that we all have here as traders, myself included. And that's why there's no naturally gifted traders, because that's always something that gets in the way is us. And the more that we learn that we're trying to fool ourselves, that we're trying to trick ourselves, that we're trying to confuse ourselves into not doing what's best, the generally easier it is for us to be proactive in managing our psychology. Yeah, I agree with that, Kiki. Right? It's I'm a very big believer in the power of visualization. Like, I think if I can see myself doing something before I do it, when I get confronted with that decision, it's easier for me to make it. So it's like if I'm dealing with, let's say, an emotional issue with my trading, I want to visualize myself getting to that emotional trigger point and then going left, right, instead of going right. Visualize myself like coming back down to earth type thing. And the reason, guys, we're not trading this year is I just have a no trade rule this morning up until at least that 9:45 data. Right, so we did have a good signal there on that 2 min, but I'm just not trusting anything here up until that 9:45 data drops. Just too much headline risk until then. It can be, yeah, Kiki, it can be. Eventually, it gets easier. Like I don't I don't know. I don't feel like I get too bad FOMO anymore, or like not too much. And I think it's just because I've practiced it so much that it feels normal. And I'm never going to hold it against myself when I give myself a restriction pre-market and I listen to that restriction. Like, my rational brain before trading hours is usually smarter than my autistic one during trading hours. So it's better to listen to that version of Michael than this version of Michael. He's a little bit less biased. And it's the same thing for everyone, right? In their hours, right? We all we change a little bit once the market opens. We lose the ability to see the things that are obvious to a certain extent. And we just start to see the things that we think will make us money. And that can be a little bit of a dangerous cycle. Now, the trade to the downside would have worked. So, maybe I didn't need to have that caution. There's still 5 minutes to go. So maybe we did have enough time, but that's fine. Fine by me. %. If a trade is strong, it'll give us more than one chance. I'm not worried about that. And I think believing that with all my heart and soul, Kiki, is what helps me fight a lot of those FOMO feelings. I have enough evidence of that, I guess, at this point where it's like it's irrational to doubt it. And I do feel like I get enough trades. Like I feel like I get enough opportunities where missing one isn't a huge deal. So still 3 more minutes here. Yeah, I love that analogy, Mike. It's so true. It's like, yeah, guys, there's always another trade coming. I always, I don't know, maybe it's something I tell myself, but if like the market stops and, the market ends and we never get another trade ever again, like, no offense, but we've probably got way bigger problems than the market. Like, I'm probably drafted by the Canadian Army and I'm in drone fodder for some Russian kid who's been on the other side of that equation. Right? You guys are probably too. So, there's no explanation for that, Sonia. Like, we don't know. It's just, why is it a doji candle? Because buyers and sellers fought for the 2 minutes. Like, there's no absolute reason why that happened. So we're always going to get another trade, guys. Like, we're always going to have another opportunity. The market's not going to stop. And if we do get a trade, sweet. If we don't get a trade, sweet. We'll come back tomorrow and we'll get one. Or the day after, or the day after. Like, I've had, probably close to 700 trades on the year is my guess. 750 trades on the year. That's like, I don't know, 2.5 a day, 3 a day on average. Yeah, for sure, Sonia. I look at it maybe a little bit differently. So there was the data, by the way. do look at it a little bit differently, where maybe I'm looking at it more of like I don't really care what the market is doing until it triggers a like setup trigger for me, right? Or gives me a reason to be interested in a play. If it's just going to be like random candles, I kind of want to just call them random candles and not need an answer for everything. It's almost like liberating for lack of a better term to behave that way. So it's like I only want to find answers to questions when they're within the context of my system. Otherwise, I'll probably just end up talking myself into trades. So not enough volume there to call that a reversal. Maybe on one of these longer time frames you can get something. But the most recent candles are not really a very strong indication of good trending PA. I'm a little bit paranoid about this stalling. Like all we want is, okay, if my idea is strong, does price action tell me that my idea is strong, right? That's why we use candlesticks. So candlesticks are to give us context, right, over the quote unquote strength of our setup trigger. If our idea is correct, then we should see more bulls than bears or more bears than bulls. And we should see just that side in control for the entirety of our candle. That's where candlesticks and shape come in. And so we're using it once we have an idea to judge its strength. If we're trying to judge the strength pre-idea, we're starting to galaxy brain it probably a little bit too much. So not necessarily. I mean, if we saw good volume at the data, sure. But I saw price action stalling right in the 5 minutes before the data and then didn't really get like a very dramatic reaction to it. So that makes it harder for me to believe that it's going to be a continuation. The other thing here is this move to the downside has already kind of happened, right? If this is my confirmation and my target here is then that 180, we've kind of gotten to that point and then we've lost the momentum. So now my setup trigger, right, would be a breakout towards that 2600 and would need more of a continuation or a new trigger versus this one, as contextually this move looks like it's happened and stalled. Like to the downside, right? We'd be looking for the secondary targets now instead of that initial one. A little bit better volume wise from bulls. It's not a great candle shape. So again, let's see. Yeah, I can't trade Tesla, right? Like it's not a future. So we use our equity tickers to just have an idea of what the like internals of our indexes are, but we can't actually trade those tickers with our prop firms. There's maybe a breakdown again, not enough volume. So we're looking at this 3 min here. It's going to have a lot of work to do. 5-min didn't go increasing. So again, kind of like signs of not super enthusiastic price action so far. It's kind of annoying. Yeah, I trade futures, primarily just NQ. Or I would say like 85, 90% NQ here. Hey, that's how they start, Mike. That's how they start. Yeah, I've got a little Nasdaq poster that I found on Etsy or somewhere. And once I saw it, I was like, "Oh, I have to buy this." Okay, so we maybe have a 2-min setup here. Right, targeting 26. Let's see how this candle closes. It look like something like this, right? For now, we want to see this candle sharpen up a bit. We want it to look like most bearish, second most bearish, normal bearish. And the setup here, right, is a breakout through low of day, targeting then 26,000, right? Our pre-market prep levels. Let's see how this candle closes. We still got 9 minutes, which is more than enough time for us to be able to get an execution. But this is not behaving how you'd like. So that's the wrong candle shape. So now we'll delay that to a longer time frame. I guess probably the only thing we have is the 5-min left. 3-min, right? The previous bar went decreasing volume, not increasing. That's why I'm not interested. Annoying. And just whatever. One setup at a time here. Same thing on ES. Not a good enough candle shape. Not enough or not outlier volume on the longer time frames. And we have 7 minutes till market data. So still enough time, all things considered. Seems like most of my trades these days are like 2 minutes. Been a long time since I've had like an hour-long slugfest with the market. I love. All right, so now maybe we're setting up as a possible reversal. 3-min might give me that increasing outlier. Right, and then we're calling it a reversal because it, contextually looks like a failed breakdown. Right, so if we're saying bears would fail, what would that failure look like? Well, it would fail on a quick move lower, that move stalls out, and then a tremendous amount of bullish volume. It's kind of what we're potentially seeing here. I'd be very surprised if this candle doesn't go increasing at this point. Be really close, but let's see how this candle shape closes. Might have jinxed it. Not the best close. Kind of still looks a little bit doji-ish. Okay, maybe this 5-min will go green. I hope you're not as cruel as the Canadian government is, Mike. And you leave some for the kids. Okay, 30 seconds, needs to close above, was that like 150-ish, 154? It doesn't appear as if it wants to set up. It kind of appears as if it wants to do its own little thing. Ooh. Oh, almost gave us a normal body bullish close, actually. Teased us with it. But still a no, so I gotta be patient. Now we're getting pretty close. It's stalling a little bit maybe, or needing another little reset here. It I'd say like a bit of a pokey in the ribs type open, where you've had like a couple chances at some stuff, but never really the right consistency of volume and candle shape to justify taking a risk. Like a lot of compromises here so far this morning, which is not worth it. It'd be more fun to trade a compromise, but it's definitely not more profitable. Yeah, I still have to be patient. We're pretty close to it. Yeah, we've got 4 minutes. So probability, right, of me getting like a 2-min candle close or a 3-min candle close in time, getting my entry, getting the move that I want, right, in that time frame is probably pretty limited. So I'm gonna wait. Like we've not seen any like super crazy signs of trending price action, right? Like the total range that we've seen here so far today is like the size of many opening ranges that we dealt with 2 weeks ago, right? It's like not quite 60 points, but it's in that sort of that same like stratosphere, right? So this volatility is not anything crazy yet. I don't mind being a little bit patient or a little bit cautious here. And if I'm wrong, no worries. I'll try again tomorrow. like it doesn't make a difference. Basically, I think a big, I don't know, a big cheat code, I guess, for your psychology is just not expecting yourself to be perfect, right? Not expecting yourself to always get it right. All we need is to be right 1 times more than we are wrong, effectively. So the less pressure we can put on ourselves or like expect of ourselves intraday, I think also makes it a lot easier to manage our trading psychology. If I almost like assume that I'm going to act like a total freaking idiot, that I'm going to make a bunch of dumb mistakes, it's a little bit easier to stomach them when it does happen, right? You're gonna miss trades, you're gonna miss your take profits, you're gonna miss your entry sometimes. These things all happen. It's all totally natural. I just can't allow myself to make mistakes from like a risk management perspective. Those are the ones that have zero leeway or zero flexibility. And if I'm near perfect on those, then everything else will work out fine as long as I basically maintain my control. It's just the ruler. All right, so let's see if this data is actually something. At the very least, we're just wanting it to trigger some volume, right? It has been a pretty light volume day. Not sure if this is the reaction I expected to data. Like, am I sure it's 10 a.m.? Like, what the heck? Yeah, that's a little bit more like it. All right. We got 60 seconds here. Let's see. And we effectively just need to close under this like blue line, right? It's like under that 118 area. Previous low of day is kind of what we're looking for here. And as long as the candle doesn't make like a massive move and then pull back, we should be okay. $30 seconds. Let's see. I would say best case scenario is a close under 100. It's not necessary, but it would make things nicer, I would say. Okay, 5 seconds here. So let's see if this thing finishes setting up. This would be a short. Still got a lot of work to do though, so just be careful, low lizard, right? We're not jumping into a trade yet. Okay, so now we need to see the fake out get established, right? Let's see if that happens. So we had 118 as our initial, right, breakdown spot. So a little fake out above that would make some sense. Right, turn our previous area of support into, or previous area of resistance, right, into support. So for now, setting up the stop loss to be 123. Would have to be higher, pretty much higher right away, as I said that. So now it'd be like 126. Then the reference price would be like 119-ish here. Right, so around that. That's too fast. But that would be approximately how it's mapped out here now. So entry, or sorry, stop loss would be 132. And now we're looking for like a gentle pullback into that area. I would say the pullbacks we've seen so far have not been super gentle. That was a little bit better. So maybe a little bit too quick. Like it's bouncing higher in 2-3 point increments. So it's not quite ready, I don't think. Okay. We'll be looking at a 132 stop loss. And so we can get a gentle pullback here now. That's a much better reaction. So 132 would be your stop. We're looking at 2 contracts. I mean, we need to see it pull above 118 gently. And if it doesn't, right, then we'll tighten this up if it breaks down through that 100 barrier. Okay. Now we're going to be just waiting for it to next candle here now, right? No entry on this one. Okay. So again, wait for the little fake out here. Reference price would be that. I could do like that actually. So stop loss for now would be 105. Higher now, 107. A little bit bouncy around this 100, so being patient still. It's a good rejection. So watching here. Stop would be 108. Oh, come on. Okay, watch here carefully, guys. Might be our chance. Okay, so watching closely here. That candle's fine. Doesn't scare me. White line, Ralph. Watch the videos in the start here. Not the right time to ask that question. Look, my profit target is written out on my screen. We talked about it for 15 minutes. Not the right time for that question, man. $115 would have to be the stop loss. And reference price would be here. 106. Whoa. Okay, way too fast. That scares me. Call this a reversal setup here now, potentially. What I'm going to do. Now we're looking for a long to the upside. Stop would be 120. Reference price would be 127 or better. About 121 stop loss. Okay, again, give me a gentle pullback here. Okay, is that our little fake out? Now 120 stop loss, and I'm looking for my entry here, guys. Okay, I am in 125.50, 125.50. long. Stop loss 120. So far, so good. I don't like that little pullback. Okay, guys, I'm going to look for my exit here. I don't like that retracement. All right, guys, I am out. Exit price 128.50, 128.50. I felt early on that trade. I'm going to reset this potentially and try again. Fine. Okay, just gonna look at this at a different candle potentially here now, right? So we can get a reset, tighten up the risk. All right, well, that's a bit annoying. I think it was still the right decision. We will try this again. That's such low volume on this breakout. Oh, exceptionally cruel. All right. Nice work, low lizard. We'll try this again. Not really a big deal. We've got a lot of space to go up towards high a day. Yeah, but that was 15 minutes ago, right? So that's no longer the catalyst of this move. Yeah, I mean, I have no issues with how I closed that trade. Like in my notes here, I've got it retested my entry 3 times. So it's like, you know, how many times can it knock on your door before it breaks through? And so I got out after the 3rd test. That's fine. Make your 3.25 points. If that's what I get paid for being early, that's a pretty good spot. I'll take that. Yeah, it's not like we missed a 1,000-point move either. It's good process. If you don't like the way a trade is behaving, get out and get impartial. You don't know where it's going to top. You don't know where it's going to reverse. And if I had hopium, I just would have gotten stopped out and went from being up 1,500 to losing money. So I'll take a small win where I get impartial and I follow my process. Then a monster win where I have to break my rules and hope I get lucky. Like that's honestly like the biggest difference in my trading in October versus my trading in like August. August, I fed into the hopium a little bit and would let trades uh like play with me before they would go. I'm not letting that happen now, or I'm being much more aggressive in preventing that from happening, and remaining impartial for longer makes me more money long term. Long term in this case is like a month long sample size. So just fighting against that feeling is something I'll take 10 out of 10 times. Nice work, Todd. And yeah, was the right decision in hindsight. So now we're looking for another breakdown here. Well, honestly, Mike, it was because very deliberate improvement, right? Like I noticed that my hopium was costing me money. It was costing me money more often than it should. So if that's the case, right, and I notice that's a flaw, and then I fix it and attack it, and then I see good results from that, right, from making that change. That's like the best type of confirmation bias you can get as a trader. Because it's like, oh, I've got fixed a flaw, got better at dealing with that flaw. Oh, and I got paid for fixing it. Sweet. That's a good deal. So not a good enough candle on that 3 min, not a good enough candle on that 2, maybe on the 5. And yeah, James, that is good management. I would have liked, hopefully, for you to be able to close as it was green. I think I gave people enough heads up there. But that is still good management. I'm not going to beat you up over a point and a half. Yeah, it's getting closed under the lows, right? So we needed to have closed under 88. It didn't do that. Facts, Logan. Was so negligent of them. It was unbelievable. And we're looking for a nice, just high volume breakdown right under low of day. All right, so still nothing here. Still not holding under that 88. Did a little bit there on that inside bar. It did make a lower low, actually. Maybe this is a longer signal. I'm just trying to get my notes all in order here. I'm trying to do them on an iPad. All right. Again, I'm still waiting for a nice volume profile and a crack. Maybe on this 2-min time frame, we have a chance. All right, so we do have an increasing just by the skin of its teeth outlier. So again, we'd be targeting 26,000 here. Want to see that little bearish fake out first, or that bullish fake out first, right? Because this has just been a straight line lower, which pretty hard for me to chase this, right? If it does occur. Again, might mean that it's a little bit easier to trade now on the 3-min versus the 2-min, because 3-min kind of just ran away from me. So I'll let this thing close. We're going to get that lower volume on the 3-min. Okay, so same thing. Let's see if we can get that little fake out first. Looks pretty solid. So stop loss would have to be 50. Let's say reference price right around there, 45. So stop loss would be 50. Let's see how this pulls back into it first. Short. Okay, stop loss would now be higher. So it's like a 55. Call it 56. So now we're going to push that reference price higher even. And push that to like 50. So now stop loss is 56. Again, watch the speed of this move. Uh, 20. Oh. Being dumb here. Now we're looking for a gentle pullback right into our area. We're going to watch on the 3. Trying to figure out if there's a good enough risk reward to justify taking this on the 2. The stop loss would be then 47. Or 48, and your reference price would be like 42. I still want to stick to the 3, though. I didn't like that little bounce. So yeah, I'm going to stick to the 3, guys. Reference price is still 50. Let's see if we can get close. If not, I'll just reset again, right? And keep playing that way. I almost want to be looking for like a pullback that feels so unreasonable that I have to take it. Still only 7 points. That's not much. Interesting. Now we're looking at the 5 as well. So we got a lot of flexibility here on how we can trade this. That would put a stop loss at 44. Reference price, we'd probably call it like 38. Again, same issue we've had on a few of these trades now where it's just instantly lower, no really reasonable pullback. It's a bit annoying. This motherfucker. Oh, classic. So if this thing pulls into 39 now, right, I'd be a little bit skeptical of it. I'm going to keep looking for resets, right, of tighter entries. We keep getting like that pretty nice little elevator rejection on these little pullbacks. I do feel good about the thesis. I just now need to get a justifiable risk reward ratio to take the risk. Okay, fine. All right, same things. We want to see a little fake, excuse me, a little fake out here. That might be it. Okay, we'll be looking at a 28 stop loss, 028 short. Oh, it was a bit too fast. Still no obvious reference price. Now we're looking at an 032, 033 stop. Okay, good little rejection. So I'd go like reference price here-ish if I can draw it. Oh, way too fast. Again, weird. Now we're going 38. And we're looking at like a 35 or 33 reference price. So 38. And it's a 33, and we're looking for it to pull into that area gently. Right now, it's very aggressive in how it's doing it, right? It's kind of doing jump scares. So when it's moving like that fast, hard to get a fill, hard to be confident that you're buying a discount, right? Hard to not feel as if you're not going to get faked out. So we're looking for price action to behave in a controlled way here. If it doesn't, yeah, we'll just reset up for a tighter risk reward ratio prior to making that decision. Yeah, this is a little funky. Oh, it's moving. Violent jump cuts kind of thing. That's so fast. Let this thing close. Okay. Let's see if it fakes out here. Okay, so now watching for a little gentle pullback again. Nice and gentle, though. Nice and gentle. Come on. Close. Okay, that's a little bit fast. That would set stop loss now 139. That's a good little rejection. Oh, I have a bit of a fuck up here. Couple trades that I tried to submit, but I had no visibility over. I mean, it's a happy mistake, but I'm out of that position. It's a little bit of a fuck up. Fill price was 34. I'm going to try this again. I'm out of that position, guys. I'm out of that position. I had no visibility over it. Trade evade's being funky. Anyone else is having some issues here? Yeah, a bit weird. Yeah, it's effectively what I'm getting. It's like I'm trying to. I mean, the position I had no visibility over. I couldn't see what was going on, and ended up being like clicking submit twice and having 8 contracts. That's why I got out, right? Because when I did get to visibility, it was very, very funky. So that's a little bit of a happy mistake, but not really one you want to like, bank on going in your favor. It's like that, collect go $200 type mistake. So okay, obviously out of that trade, now we're looking for a reversal scenario here. Pretty aggressive volume to the upside, right? Failed move. So let's see if this wants to behave. But this is going squeeze mode in every direction. Fucking annoying. Let's go, Nick. Yeah, I mean, I'm doing trade evade via trading view. So would make sense. It was really annoying. I mean, that was $1,500 mistake. Oh, God bless America. Yeah, let's go, Mike. Green is green. All right, so we got reversal set up here to the upside. Really high volume, really strong candle, right? Overcame all those wicks. A story of adversity. And target here would be high of day on this reversal setup. Second reversal attempt we've had here this morning, right? Stop would be 157. Reference price here would be, I call it like 163. Motherfucker. 15 seconds here on this 2 min. So again, we'll try it on here. So the way, guys, I got my visibility on my trade is I refreshed my trading view. When I refreshed it, it showed me my position. And then when I refreshed it after I clicked close, it showed me I was out. So just a little heads up, right? If you click submit and you think you should have gotten filled, refresh your trading view just in case. All right, we want to see a little fake out here first, some sort of bearish failure. But for now, stop loss would be 173. There it possibly is. That was very dramatic. So now stop loss would be 171. And we're looking for a gentle pullback into like the previous confirmation high. Yeah, 071. Yeah. I might have gotten that wrong. Sorry. Five min just closed the same levels. This is kind of annoying. Why does 6 points feel like so much? Yeah, it's quite the explosion now. We got 30 seconds on both the 3-min and 2-min. So 2-min will continue to be our time frame of choice here. Oh, it's a little crap. But I got very lucky, guys, with that last one, right? Very, very lucky. So I just want to make sure, A, I'm addressing that, but B, right now, controlling my behaviors around that. I'm pretty happy with how I did. I mean, I got out of a trade instead of getting hopium again, which is the right thing to do, but can't allow that to make me feel like this air of invincibility, right? Or anything along those lines. So really, really focused on quality of process here. And stop loss would be 081. 081. So 10 points higher than what we had. Okay, now it's going to be different. Now we're looking at a 79. Again, let's see if it bounces. And now we're going to be looking for a fake out under 71. Yeah, apologies, guys, for how I called out that previous trade. But if I don't have visibility on my position, I can't call it out. So I'm very sorry about that. Okay, we're looking for a little fake out under our quote-unquote confirmation low. Now we're looking stop loss 069. Reference price here would be 072, whatever. You can go maybe even a little bit higher. 69 is pretty tight. So we're looking at an 069 stop loss. And we're looking for a little entry under 74.50. Okay, guys, I am in 73.50, stop loss 69. Perfect entry. 4 contracts on this, could have gone 5. There's a quick $1,000, 1,200. All right, guys, I'm out. I am out. Exit price 90.25. Exit price 90.25. Take my $1,300 and run. Again, we'll try this again. We'll reset here, get impartial. That was a really good second trade. Good times. Let's go. Nice work, James. I mean, definitely could have held out for longer, but I'm just taking my win and running, getting impartial, trying again. Woo. Good day. Good day. Hey, if it's strong, Kiki, it's going to set up again. You know this. And in the meantime, here, I'm going to journal this. Hey, green is green. That's the best thing you can ask for. Okay, good decision, guys. I think it was a really good decision, right? That was a really good decision. Yeah, every time, Kiki, because like every time the market makes me feel greedy, I'm gonna make a mistake. Like that's pretty much the evidence I have in my trading. And this would have stopped me out had maybe I could have held on for longer, right? But so my entry was 073.25. Exit price was 090.25. So like 17 points on that. And I had 4 contracts with the stop loss at 069. So stop loss of about 5 points. Notes on this: was green right away at entry, no hesitation, climbed to 80 so quickly that I needed to take profit, felt greedy, wanted to fight my hopium after getting bailed out of a mistake, could have held on for longer, but would have stopped me out next candle. Those are my notes here. So I just want to address, Roberto, your question, right? Look, the reference price, the fib tools, all those things, I draw it out for your guys' benefit so that you can visualize my setup better, so that you can see basically how I'm boxing in the trade and then hopefully type in those numbers. I would say that it's probably quote unquote expert mode to adjust your fibs and then type in your numbers. I think it's faster to type in your numbers first and then adjust your fibs to that. So that's my own personal process that I'm doing, right? So I type in my numbers, make sure my order window is set up how I expect. And then from there, right, I'll drag my fib to make sure that it's a more accurate representation of that thesis. So for me, right, once I know what my stop loss price is, it's more important for me to make sure that I'm set up for my execution, because that's going to move faster. So I'd rather slightly misrepresent my chart. And I don't mean that as a negative, like I'm not doing it on purpose, but I would, if I know my stop loss, I know what the price is, and my fib is 3 points higher, right? It's at 66 instead of 58. I'll type in 58, and then adjust my fib. I use trade copiers, Cool Shade Rentals. There's lots of them. Just Google third-party trade copiers. You'll find a bunch. Effectively, it's a leader clone system. So if I take one order, I should get a across the board. You know what, guys? All things considered, a pretty good day here. Pretty good day. 1,300 on that last one. My biggest trade of the day was a mistake. That's pretty lucky. Yeah, guys, good decision to close where we did. Again, maybe we didn't maximize it, right? We didn't top tick the exit, but that's okay, right? Profitable traders are always closing their position before the market turns. That's why they're profitable. And closing as your P&L is increasing removes a lot of that like FOMO, right? So if you don't see a smaller number before you close your trade, so you don't see a bigger number before you close your trade, mentally you trick yourself into feeling like you missed less of the move. all things considered on this case, I wouldn't say that we missed the move. I think we did a pretty good job managing that as we did. Love that, Barclay. That's the most important thing, guys. So you judge ourselves on, did I remain in control? Did I behave how I said I was going to behave? That's the ultimate sign of victory. Everything else is a little bit of a compromise, or it's like kind of cheating yourself a little bit. So glad you didn't do that, man. That's the most important thing. Oh, weird, kind of a weird Monday. How's everyone feeling? Everyone feeling okay? Everyone learned something today? And if you did learn something, what'd you learn? So Tyler, you can log into your trading view via Tradeovate, right? So you can access the same platform you were trading on your eval, or sorry, in your paper trading in your eval. So you can reach out to Eric; he'll help you set that up, or you can Google it. It's a pretty easy fix or pretty easy setup. But you don't need to trade inside Tradeovate. You can trade directly through TradingView. All right, appreciate that, Jim. Oh, okay, interesting. Oh, you'll figure it out, Tyler. I'm sure. I appreciate that, Jim. Like I try to be stream of consciousness is how I describe it here. Sometimes that's got its pros every now and then. It's got its cons every now and then. But always will walk you guys through my process. Nice work, Hank. Hard to say why you missed the trade there, Jerry, right? If you're executing as the price is going up, right, good chance you would have missed it even if your execution was 0.74. Try to really focus on buying on the downtick, right? So as trades are, if we're going long, we want to be going as price is decreasing. So not when we see a 73.50, but when we see a 73, right? And then whatever. The other alternative, right, is if you're using the reference price as your guide, nothing wrong with using market orders in that context. Again, it's just a little fake trade, not something real. So as long as price is below the reference price, you can use a market order, but you're just subject to a little bit more slippage there, and that could potentially, cause some pain. But if it means you get into more trades, more entries, that's a pretty good thing. I would say with this trade, right, Like I was pretty much green right away on this. Like my entry timing was near perfect. So, you know, if you're waiting for me to say that I'm in and then you're doing that bid at zero or ask at zero system, you're probably sending an order as the price is above what you're sending. And so that's kind of what's getting you to miss it. It's just the speed of what the move happens in the 1 second it takes for your order to be processed. The price has changed and now it's above that price. So for me, the focus, like I mentioned, it's I want to be buying as I perceive price to either be stalling or going against my thesis. That ensures I get fills at a much higher percentage. Now I will miss some, but I'll miss like 2% of the ones that I want, not 50%. So find that balance, right? For everyone, there's no like right or wrong way of doing it necessarily. It's just judging your entries then, right? Good entry is better than reference price. Bad entry is worse than reference price. That judgment is going to be a little bit more important if you're going to be using market orders. There's nothing wrong with using a market order to get into a position. If your primary objective is you just want to be in, it's better to get into trades and then refine your entries to get those to be perfect than it is to expect yourself to be perfect on your entries right away. Like the more that you can find a trading problem that you have and break it down into small steps, easier it is to solve that problem and the easier it is to start to see progress from fixing parts of that problem. So for a lot of people, right, your biggest issue right now is that you're missing trades. Well, market orders will fix that issue and then they'll create a little bit of a sub issue, right, where you're maybe not getting as much P&L or as good of entries. But once you've gotten to the habit of catching more and more trades, things are going to slow down for you and you'll start to see those better entries as you train your eye. So it's in trading, it very much is like there's always a problem that you can micro fix to make your next one a little bit easier. And you're kind of going through that feedback loop consistently. That makes sense? Like, I don't want to sound cocky here. And I don't mean this in a, I don't know, weird way. Like I've been trading for almost half my life now, right? I've been 13 years. I'm 32, so maybe not quite half life. I'm older than I like to perceive. And so it's been a huge part of my life. Like my execution is so muscle memory. I've been doing it for this way. Yeah, I mean, there's a lot of videos, Skippy dude, on how I look to enter my trades. I did like a 15-minute video on it a couple weeks ago. I would review that. It's going to be more detailed than I'd be able to provide you right now. But I'm basing my risk off of the reference price, right? So if I draw up my reference price, again, not a real trade, just a hypothetical. Let's say that my reference price here was 0.81 and my stop loss, I mean, probably wouldn't be going that big. Let's say it's 75. My reference price is going to be 0.81. I'd set my risk on that. So I'd have 6 points of risk on this. And then I'm just looking to get as deep of a discount relative to that blue line as possible. But I wouldn't increase my position sizing. From there, right, I just remember what the number is. So if I were to set this trade up, again, fake trade, guys, I'm not taking this. So let's say that I was to take this trade. Stop loss is 0.75. Right? And reference price here would be 0.81. It's called 0.80. So then I'm just remembering this price, right? Okay, I've got $500 of risk if my entry is that. And then I set my ask to 0 and I wait for it to pull back under my blue line and for that number to be less than 500. Does that make sense? So then if I see minus 350, minus 275, that's when I click submit. It's the same thing with market orders, right? You can do the same thing with market orders. Okay, I want my risk to be $500. You just watch that risk column, right? Because it's just telling you the correct or the current price. So now we're waiting till I see less than 500 or whatever my max risk is. The second I see it going down to that number, that would be my moment where I click submit. So again, here I'm just watching. 675, no. 800, no. 700, no. 575, no. 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 Boom, 475, and I'm in. Right? So that's all I'm looking for. Limit order would submit you at that limit price, right? So you're telling it, I want to be filled at this price. Setting the ask to 0 means you want to be filled at current price. So it's a subtle difference, but it gives you more precision. Yeah, I mean, for sure, Kellen, it's got to move slowly or it's got to be moving in control, but that exists for emotional reasons, right? When the trade is moving really quickly, I make it really difficult for myself to get the price that I want, get a fill at the area that I want, and I lose confidence that my stop loss is going to hold. So I end up making a more emotional decision. When price is moving slowly, or I perceive it to be moving slowly, that's almost like a synonym for me not having an emotional reaction to price action. And if I'm not having an emotional reaction at my entry timing, it's a little bit easier for me to make a rational decision and to get a good entry. So like if I were to set a limit order, so just to answer your question in more detail, Randall, right? And I were to set it at 069 or whatever, 070, I'm only going to get a fill at that price, right? It's going to fill me only at that price. If I set this to 0, I'll be able to get that discount more accounted for. So I effectively am using the 0 system to turn my execution into a complicated market order, where I'm basically saying, okay, the moment I click fill, that's the price I want. I don't want to accept worse. Right? Because I'm not optimizing to get into trades. I've got no problem getting into trades. I'm optimizing for best entry price, right? Or the best entry price that I can get away from. So potentially we're playing a different game here. What it would do is it would execute up until this price, right? So it gives you a bigger buffer for where you're going to get that fill. So again, like I said, man, we're solving for a different problem. If you're solving to try to get into a trade, yes, no issues. If you're solving to get the best possible entry, you want to have more precision. So again, right, we're solving for different problems. If you're missing your trades and you're not getting entries, then you need to optimize to get more of your entries. If you're getting all your trades that you want, but you're spending too much time in drawdown, well, now you got to refine your entries and figure out what you want to do. So you got to be selfish here, guys, and be honest with ourselves over what our problem is, because we might not be solving for the same one. So if you're solving, right, to get the perfect entry is me, but you're not getting entries, you're not making it easy for yourself to solve that entry because you're not in trades, right? So you're in the worst case scenario there. And so we want to manage that just a little bit better. So too many people here are missing entries, right? And they're missing entries because they're trying to be perfect on them. You're not going to be perfect on your entries. So you got to start getting in them and then start refining and then viewing perfect as like a larger sample size. How'd it go, Kiki? Good fight back day for yourself? Hey, green is green. And you should be proud of yourself for controlling your emotions, right? Not doing anything stupid and not allowing the pressure of needing that $70, right, to trick you into doing something stupid. So well done. That's a good reward now. So enjoy it. That's fantastic. We're really focusing hard on just getting a little bit better, right? Every day, just get a little bit better. That's how you make money long term playing this game. Realistically, guys, I'm not interested in placing any further trades here on the session. Nice work, Christopher. Congratulations. I'm pretty happy. Nice little green day. One good decision, one mistake, right, that I got bailed out of, and then one nice trade. And the mistake, I would not say was a mistake on my end. It was a technical mistake, right? A platform mistake. I just got out as soon as I noticed it, which is fine. I got lucky with the result. The process was fine over managing that. No way in hell I ever want to be in 8 contracts off the bat. So my risk profile or my risk rules are described in a lot of detail inside the Discord in the Trading Basics channel. But personally, it's based around a max loss number. So for me, the max loss that I think you should take inside your prop firm on a day is no more than 1% of your account. On average, I take about 3 trades a day. So if I'm trading a 150K account, my max loss per trade should be about $500, i.e. the total max risk per day divided by average number of trades per day. And that's my general rule of thumb. What do you mean? But I'm not sure if I understand your question. When do you know that you have to look at the percentage limit for prop firm accounts? Like when you sometimes draw out your percentage at, we have to be careful with. I'm not sure what that means, Sonia. Do you rephrase that potentially? Are you talking about drawdown maybe? So, I mean, every day you should start each trading session knowing how much drawdown you have left inside your prop firm dashboard or whatever you want to call it. It'll tell you the dollar figure that you have. That would be really the thing to be aware of. So that information is updated in your trader dashboard every afternoon. So I would just make sure that you're aware of that. Okay, I'm more confused now, Sonia. Are you talking about limit down? So like limits when the market will stop trading? Is that what you're maybe asking about? Or like percentages for where the firm will prevent orders from coming? Is that what you mean? Okay, so mostly just exists for CL. So CL, if it's more than 5% down, Top Step stops allowing you to submit new orders. So that's just something that we every now and then have to look out for when it's a big gap down at the open. On the indexes, it's really hard for us to get a 5% down day. So it becomes a little bit less likely. Like 5% down would be like a candle that big. It's very unlikely to happen. But generally, when it does occur, your prop firm will send you an email to let you know, hey, we're not accepting any more orders, whatever it might be. No, it's all good. All good. You got there in the end. Yeah, it's mostly a CL thing because CL is pretty tight. It has some volatility. And so it's a little bit easier for us to have those 5% days, especially when it's a decent gap down. So it just slows us down. Most exchange limits are 7%, at least on the tickers that we trade. But some prop firms will have like other rules and requirements basically around that. All right. Any other questions here? So today, no reward day for me, right? Because I had that mistake on that second trade. So no reward here today. Nice work, Audrey. Well done. Any other questions here, team? Try to organize this journal a little bit, but feeling good. Love that, Dawn. Love that. A little bit of improvement each day goes a long way. So again, if we give ourselves something technical to focus on each day as well, right, then we can really quantify that improvement quite easily. That's when things get fun. All right, guys, final call for question here. Final call for questions. I got to figure out a template. But yeah, Evelyn Green. Love it, team. Really strong session today. Really, really strong. A little bit of yeah, a bit of a misleading P&L day here, but I will take it. A nice little start to the Monday morning. Today is what, November 3rd? Oh my god. So sad. So we'll go 3 and 0. All right, guys. So final call for questions here. Journal submission for the day worth reading out. So expected a day of consolidation, and we ended up getting lots of range-bound type price. Had 3 trades, but only should have been 2. My first trade of the day behaved reasonably well. Decent entry, some follow through, and then tested and retested my entry 3 times. After the third retest, I got out for a small win. The second trade, I had a system glitch on me, submitted an order short for 4 contracts. Did not see visibility for a fill, no order in my order tab. So submitted a second trade. Again, nothing in my orders tab. I refreshed my trading view and then saw I had 8 contracts short and was up 1,500. Closed that trade instantly and counted my lucky stars for getting bailed out like that. Trade would have stopped me out 5 minutes later had I not closed. I had too much risk on to hold on to that thesis. And once you have a system glitch, best thing to do is to get out. Final trade was a 5-min reversal with a 5-point stop. Played NQ to the upside and got really good follow through the 90s. And then price gave us a classic capitulation pump. Ended up moving faster than I expected, so I took my win and ran. Maybe left 10 to 15 points on the table, but I took my 3R win off the table ASAP. Good trading day where I kept my head in spite of some challenging technical pain points. So no complaints with today's session. Again, a little bit of a misleading P&L, so I don't want to brag about that or anything along those lines. My biggest win was effectively a glitch trade. So that's not something that I want to flex too much, but I did a good job managing my head in spite of that and didn't get greedy. That for me, I think is the main thing here today. I traded my system well. I ignored my emotions pretty well and just didn't bring any baggage or ego or greed or hopium or anything along those lines from October into November, and just put myself in a good situation where it was easy to be green. Entries today, I think, were pretty solid. Didn't spend much time in drawdown. Take profits were aggressive, but reasonable. Maybe left a little bit of money on the table, but I'm not going to complain about that too much. And then, yeah, just trade evade. The trading view gave me a few issues, and I didn't allow that to turn into a greedy decision. So all things considered, pretty successful trading day here. Can't really complain about that. And hopefully we can set ourselves up for what should hopefully be another strong day tomorrow. So same deal like always, team. If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. Otherwise, have yourselves a tremendous rest of your afternoon, and I'll see you guys tomorrow. Peace.